Now this is the earnings report I wanted to look at today, right? HP Incorporated. Very excited for this one, obviously, because I'm a shareholder of this company, and it's one that I was anticipating these results to see what exactly they might be able to muster up. So we'll get right into these results. A stock that I think, based off P ratio, pretty darn cheap. So let's look at their results. So quarter two non-GAAP EPS of 51 cents beat by 7 cents, and a GAAP EPS of 53 cents beats by 12 cents. Good, all things considered on that. Revenue of 12.5 billion, down 10.7% year over year, missed by 240 million. So there was a miss on that aspect in terms of revenue. I kind of expected them to be in line with this. I didn't expect a massive beat. I didn't expect a loss, though, so that's not, or a decrease, I should say, or a miss. I can't find the words, but definitely interesting. One thing I did want to note, obviously, if we're talking about annualized revenue, probably somewhere around 50 billion for this company. The stock's trading at a market cap of 25 billion. It's a little undervalued, I got to be honest with you, but I digress. The valuation's very cheap on this stock, especially after this 5.5% dip after hours. That's right, even cheaper now. I'll be looking at adding some, by the way. So HP is down. We're at top profit, but revenues declined and missed. The company guided towards light side of profit expectations for the current quarter. Revenues fell 11%. Paced by double-digit declines in pair of key areas. Printing and desktops combined with flat results in the notebook segment. Operating margin rose 7.5 to 7.5%. Meanwhile, net earnings fell to 0.7 billion from 0.8 billion. By segment, you see notebooks were flat year over year, desktops down 18%, workstations down 23%. Supplies down 15%, commercial hardware down 31%, and consumer hardware down 16%, and printing down 19%. Son of a gun. Those declines are not beautiful ones. Very much not beautiful ones. So you'd like to see a lot better in terms of a quarter. I mean that those sales numbers not looking good. And it's kind of a shocker. It's an area that I expected quite a benefit on due to the rise in home offices. I felt like HP could have really rocked this, and maybe in the next quarter they could. I expect a pretty decent next quarter, but really expected them to potentially go away with it, just absolutely schmang the quarter. But it looks like not that beautiful. It's guiding for Q3 EPS of 39 cents to 45 cents per share versus a consensus of 45. And it won't provide a full year outlook due to uncertainty around the pandemic. Not a shocker. I mean, no one's giving guidance out. Let's look at these slides. There's a weird heart-looking thing there. I don't know what that is, but what can I say? As far as the highlights are concerned, so everything we kind of covered here. They returned $0.4 billion to shareholders in the form of share repurchases and dividends. As far as overview is concerned, again, you don't like to see that both printing and personal systems were down pretty big, all things considered, year over year. Not beautiful. Let's see. Operating profit. Printing was 50% of the total operating profit. And personal systems were 50% of total. Very interesting there. Most of their revenue came from the Americas, 42%. 37% came from Europe, Middle East, and Africa, and Asia Pacific and Japan. 21%. Down on every area. Every segment was down. Not a single specific region that was up. Can you believe it? Revenue and GAAP diluted net EPS performance, as they're going to show here. Revenue, you have seen it's really just been stagnation overall for the past 2 years. This year you actually saw a decline, and EPS was on the rise for a little bit, but this year you see it falling back to where it was in 2018. Not exciting, all things considered. And revenue, just not beautiful in terms of the revenue. You'd expect a better number. Revenue growth seems to be declining quite a bit here. Year-over-year growth, to where now they posted a negative, and that's not a good looking chart for this company, right? It just looks ugly, not looking good. In region revenue trend, I mean, it's all the same really here. You see just declines. Personal systems, they mentioned here the shift to work from homes and remote learning drove demand, particularly in notebooks. Delivered strong profit despite supply constraints. Not a shocker. They launched the new Omen 25L, 30L for gaming, the HP Pro security service, and the new HP Envy 13, 15, 17 series. Total units were down 5%. Notebooks revenue flat, up 5% year over year. Or units were up 5% year over year. Desktop revenue down 18, units down 23, commercial revenue down 7, consumer revenue down 7 as well. For the printing segment, one that I'm interested in for future gains here, office and graphics demand slowed down dramatically as the spread and market shutdowns. Continued strong momentum in Instant Ink and with total subscribers, and Instant Ink being the program where they'll pretty much send you ink regularly for your printer, depending on what you need. You can set it up. It's a very interesting, actually, little service that they offer, so not bad. In response, customers pivoted multi-jet fusion applications and started and produced an estimate of 2.3 million 3D printed parts for face shields, face masks, and other items. 3D printing is the key. Supplies revenue down 15%. Total hardware units down 23%. Commercial hardware down 31%, and consumer hardware down 16%. Don't like to see that. This one's not quite as important. So like cash and debt balances, we'll look at that. All things considered, cash flow has been hit pretty hard. Year to date, still a positive number, but this quarter you see a negative cash flow number, which you don't like, especially out of a good dividend payer as well. Shareholder return, you see overall dividend payment not quite what it did in fiscal year of 2019, but again, year to date, actually trending upwards as far as that's concerned, so you should see a better number in terms of shareholder return as far as dividend payments concerned. Share repurchases, you'll likely see not nearly as many repurchased as last year, but that's not a shocker either. Now's a good time for them to buy shares, though, just because of the fact that, well, they've got moolah. They've got the moolah to do it, and the shares are cheap. Skip past this. They're giving 2018 numbers. Not as exciting. They didn't give me the what I needed. The balance sheet, which we always look at the balance sheet no matter what we have to do. Let's look at it right now. Let's look at it right freaking now. You can't stop me. Sorry, HP, you're not stopping me. My time is now. You can't stop me. Total current assets on this company of 19.6 billion. They give me a 6 months ago number, which was 20.1. Not overall a big change. Total assets in general of 33.7 versus 33.4. So a little bit more in terms of total assets. Not bad. Total current liabilities of 25.7 billion versus 25.3 billion a year ago quarter, or 25.2. Sorry, that's a botched read. Really the same overall, 25.2. And total liabilities and deficit overall, there is actually a stockholder deficit on this company of 743 million. That's right. This company has a deficit right now, which is not beautiful. And that's where I think you see this cheap valuation for this company. The question obviously becomes dividend and how they fund the dividend, right? How are they going to continue the dividend with a negative cash flow this quarter? with everything going on. I think they'll still be able to maintain it. So it's not a major portion of my portfolio. We're talking, what is it, 20 shares now total. It's nothing massive, but overall, dividend payments, I like them. And it's a company I think long term I have a decent vision for, but it's not more than 2% of my portfolio right now, so nothing big. If you wanted to pick up this stock, somewhere around $15 is a pretty decent time to pick it up if we get around that range. But definitely keep your eye out for HP stock.